Given the provided price history and forecast for Bitcoin, a medium-term bullish investment strategy appears promising. The recent price action shows a period of consolidation, followed by a potential upward breakout. The forecast suggests continued upward momentum over the next week, with prices potentially reaching near the resistance level. Therefore, a long position in Bitcoin is recommended with an entry price around $96,500, considering the support price as a potential entry point. A stop-loss order should be placed at $95,000 to limit potential downside risk. The target price for this trade could be set at $98,000, aiming to capture a significant portion of the projected upside movement. This strategy capitalizes on the bullish sentiment and potential price appreciation while managing risk through a well-defined stop-loss level. Based on the provided price information for Bitcoin Cash, a medium-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend with periods of both upward and downward movement. The forecast price suggests a slight upward trend over the next week, aligning with the historical data. However, the resistance level is relatively high at $531.1, indicating that a significant price surge might be challenging in the short term. Therefore, a medium-term investment strategy with a long position is recommended. The entry price should be set around $450, slightly below the current price and within the support range. The stop-loss should be placed at $435.50, the identified support price, to limit potential losses. The target price could be set at $474, the highest point in the forecast price, allowing for a reasonable profit margin. This strategy aims to capitalize on the potential upward momentum while managing risk effectively. Based on the provided price information for stacks, a cautious approach with a short-term investment perspective seems appropriate. The 2-week price history shows a fluctuating trend, with recent prices hovering around the support level of $1.565. The forecast indicates a slight decline in the coming week, suggesting potential for short-term profit-taking. Therefore, a short position is recommended. An entry price of $1.62, slightly above the current price, allows for some room for price fluctuation before entering the trade. The stop-loss should be set at $1.66, above the current price and the entry price, to limit potential losses. The target price can be set at $1.56, aligning with the support level and the forecasted price decline, allowing for a modest profit. This strategy aims to capitalize on the anticipated short-term price dip while managing risk effectively. Based on the provided Ethereum price history and forecast, a medium-term investment strategy appears to be the most suitable. The historical data shows a general upward trend, with recent fluctuations around the $3,400 level. The forecast indicates continued upward momentum, suggesting a potential for further price appreciation in the coming weeks. Therefore, an investment strategy focused on a long position is recommended. A suitable entry price could be around $3,450, aligning with the current price and the support level. A stop-loss order should be placed at $3,350 to limit potential losses in case of a sudden price drop. The target price could be set at $3,700, reflecting the optimistic forecast and allowing for a healthy profit margin. This medium-term approach allows for capitalizing on the anticipated upward trend while mitigating potential risks through a well-defined stop-loss order. Given the price trends and forecast for Ripple, a short-term investment strategy is recommended to capitalize on the anticipated price increase. The historical prices show a consistent upward trajectory, with the current price near its forecast and close to the support level of $2.3385. The resistance level is at $2.4722, indicating that there is still room for upward movement. A long position is advisable to capitalize on the potential for a price increase towards the resistance level. For this strategy, an entry price of $2.35 would be ideal, aligning with the forecasted price and allowing for potential profit. The stop-loss should be set at $2.30 to protect against any unexpected price decline. The target price should be set at $2.45, a conservative target that allows you to exit near the resistance level and lock in profits before a potential pullback. This strategy allows you to participate in the anticipated upward movement of Ripple while managing risk effectively. Based on the provided Binance Coin price history and forecast, a medium-term investment strategy appears most suitable. The historical prices show a generally upward trend, with recent fluctuations suggesting consolidation. The forecast indicates continued upward movement, albeit at a slightly slower pace. This suggests a potential opportunity to capitalize on the bullish momentum while managing risk through a medium-term investment horizon. A long position is recommended, aiming to buy at the current price near the support level of $702.60. The stop loss should be placed slightly below the support, at approximately $700, to minimize potential losses. The target price could be set at $728.06, the resistance level, allowing for a potential profit of approximately 3.5%. This strategy balances risk and reward, aiming to capitalize on the expected price increase while protecting against significant downside movements. The medium-term perspective allows for market fluctuations to be absorbed while still benefiting from the overall upward trend. Based on the provided price information for Stellar, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a recent upward movement, supported by the forecast indicating continued growth. The current price is near the support level of $0.419, suggesting a potential buying opportunity. Therefore, an investment strategy involving a long position in Stellar is recommended. A suitable entry price would be around $0.425, allowing for a small margin above the support level. To manage risk, a stop-loss order could be placed at $0.415, safeguarding against unexpected price drops. The target price could be set at $0.485, aligning with the forecasted price and providing a reasonable profit margin. This medium-term approach allows for capital appreciation while mitigating potential risks associated with short-term market volatility. Given the current price trends and forecasts for Toncoin, a medium-term investment strategy appears most suitable. The historical price data shows a slight upward trend, with the price hovering around the support level of $5.626. The forecast indicates a continued upward trajectory, with prices potentially reaching $5.65 in the coming week. This suggests a positive outlook for Toncoin in the short to medium term. Therefore, a long position is recommended for this investment strategy. An entry price of $5.60 would allow you to buy in at a relatively low point, while the stop loss should be set at $5.55 to protect against any unexpected price drops. The target price should be set at $5.80, aiming to capitalize on the potential for a price increase towards the resistance level of $6.40. This strategy allows for a balance between risk and reward, taking advantage of the positive price momentum while minimizing potential losses. Based on the provided Cardano price information, a medium-term investment strategy appears most suitable. The historical price data shows a volatile trend with both upward and downward movements. However, the forecast price indicates a consistent upward trajectory over the next week, suggesting a potential for growth. The current price is relatively close to the support price, indicating a potential buying opportunity. Considering these factors, a long position is recommended. A suitable entry price would be around 92 cents, aligning with the current price and providing a buffer below the recent lows. The stop loss should be placed at 88 cents, safeguarding against unexpected price drops. The target price could be set at $1.10, aiming to capture a substantial portion of the forecasted upward movement. This strategy allows for a balanced approach, capitalizing on the potential for growth while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, with the current price hovering near the support level of $99.24. While the forecast suggests a potential increase towards $112, the resistance level at $126.11 indicates a possible ceiling for this upward movement in the short term. A medium-term approach allows us to capitalize on this potential price increase while mitigating the risk associated with a highly volatile market. Therefore, an investment strategy for Litecoin would involve entering a long position at the current price around $105. The stop loss should be set at $99.50, slightly below the support level, to limit potential losses. The target price could be set at $115, aiming to capture a significant portion of the projected price increase. This strategy balances the potential for profit with a reasonable level of risk, making it suitable for a medium-term investment horizon. Based on the provided price history and forecast for SWAY coin, a medium-term investment strategy appears most suitable. The historical data shows a fluctuating price pattern, with recent peaks exceeding $5. While the forecast predicts continued upward movement, reaching around $5.65 within the next week, it's crucial to consider the potential for short-term volatility. Therefore, a long position is recommended, aiming to capitalize on the anticipated price increase. An entry price around $4.70, slightly below the current price, allows for a buffer against immediate fluctuations. A stop-loss order should be placed at $4.50 to limit potential losses if the price drops unexpectedly. The target price can be set at $5.50, aiming to capture a significant portion of the forecasted price increase while leaving room for potential further gains. This strategy balances risk and reward, allowing for potential profit from the expected upward trend while mitigating losses through a well-defined stop-loss mechanism. Given the price trends and forecast for APTUS, a cautious investment strategy would focus on a short-term approach, aiming to capitalize on potential price fluctuations within a defined range. The historical prices show a recent dip, followed by a slight recovery. The forecast suggests a continued downward trend, but with some potential for short-term bounces. The support price at $8.73 acts as a floor, while the resistance at $11.64 limits the upside potential. Therefore, a short position is advisable, with an entry price around $9.30, slightly above the current price and below the resistance level. A stop loss should be set at $9.55, protecting against unexpected upward movements. The target price could be set at $8.80, aiming to capture a potential decline towards the support level. This strategy allows for a limited risk exposure while aiming to profit from the anticipated downward trend in APTUS. Based on the provided price history and forecast for SAY, a medium-term investment strategy appears most suitable. The historical price data shows some volatility, but the overall trend suggests a potential for upward movement. The forecast also indicates a gradual increase in price over the next week. This suggests that SAY may be poised for a moderate rally in the coming weeks. Therefore, a long position is recommended for a medium-term investment strategy. A suitable entry price would be around 43 cents, aligning with the forecast and providing a margin of safety. The stop loss should be set at $0.4185, the support price, to limit potential losses. The target price could be set at $0.5315, the resistance price, aiming to capture a significant portion of the potential upward movement. This strategy allows for a balanced approach, taking advantage of the potential for growth while managing risk effectively. Given the price trends and forecast for Ethereum Classic, a cautious investment strategy would focus on a short-term approach to take advantage of the predicted price stability. The historical prices show a slight downward trend in the past 2 weeks, but the forecast suggests a modest increase over the next week. The current price is hovering near the support level of $25.11, indicating a potential for sideways movement or a slight upward bounce. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level of $28.48. An entry price of $25.80 would allow you to buy in before the predicted price increase. The stop loss should be set at $25.10 to protect against any unexpected price drop. The target price should be set at $27.80, aiming to capture a significant portion of the forecasted upward movement. This strategy balances risk and reward, allowing you to potentially profit from the expected price appreciation while mitigating potential losses. Given the historical price trends and the one-week forecast for Polygon, a cautious medium-term investment strategy seems appropriate. While the historical data shows a fluctuating price range, the forecast suggests a potential upward trend. The support price at $0.4733 acts as a floor, minimizing the risk of a significant downward plunge. Conversely, the resistance price of $0.5673 presents a potential ceiling for short-term gains. Therefore, a long position in Polygon is recommended for a medium-term investment horizon. The entry price should be set at $0.485, aligning with the recent price action and providing a buffer above the support level. The stop loss should be placed at $0.4733 to limit potential losses if the price drops below the support. The target price could be set at $0.529, aiming to capitalize on the potential upward movement indicated by the forecast. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses in the medium term. Based on the provided price information for AEVO, a short-term investment strategy appears to be the most suitable approach. The historical price data shows some volatility, but the overall trend suggests a potential for consolidation or a slight decline in the near future. The forecast prices also indicate a downward movement, with the price expected to hover around the current levels or potentially dip slightly. Considering this outlook, a short position with an entry price around $0.378, a stop loss at $0.394, and a target price at $0.362 seems reasonable. This strategy aims to capitalize on the potential downward movement while mitigating risk by setting a stop loss above the current price. The target price is set below the recent support level, providing a realistic profit target. Given the price trends and forecast for optimism, a moderate-term investment strategy focusing on a long position appears most suitable. The historical prices demonstrate a general upward trajectory, with the current price hovering near the support level of $1.753. The forecast suggests a continued upward movement, with prices potentially reaching $2.05 or higher. This indicates a bullish outlook in the moderate term. Therefore, an investment strategy for optimism could involve entering a long position at the current market price around $1.82. A stop loss could be placed at $1.753, the support level, to mitigate potential downside risk. The target price could be set at $2.05, aligning with the highest forecast price, allowing for a moderate return on investment. This strategy balances risk and reward, capitalizing on the expected price increase while protecting against significant losses. Given the price trends and forecast for STRK, a medium-term investment strategy focusing on a long position appears most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations suggesting consolidation. The forecast predicts continued upward movement, indicating potential for capital appreciation. The support price at $0.5073 provides a solid foundation for a long position, while the resistance at $0.5876 presents a potential target for profit-taking. Therefore, a long position in STRK with an entry price of $0.490, a stop loss at $0.480, and a target price of $0.570 appears to be a promising strategy. This approach allows for a measured risk-reward profile, aiming to capitalize on the expected upward price movement while mitigating potential losses. The stop loss price is set below the recent support level, ensuring that the position is exited if the price declines significantly. The target price is strategically placed above the resistance level, allowing for substantial profit potential if the forecast proves accurate. Based on the provided Solana price information, a medium-term investment strategy appears to be the most suitable. The historical price data demonstrates a generally upward trend, with recent fluctuations around the $200 level. The forecast indicates further price growth, reaching $218 in the coming week. This suggests a bullish outlook for Solana in the medium term. Therefore, an investment strategy involving a long position is recommended. A suitable entry price would be around $205, allowing for some room below the current market price. The stop loss should be set at $195 to protect against potential downside risks. The target price could be set at $220, aiming to capture a substantial portion of the anticipated price increase. This strategy balances risk and reward, taking advantage of the positive price momentum while mitigating potential losses. Given the historical price data and the forecast for Jupiter, a medium-term investment strategy appears to be the most suitable approach. The historical price shows an overall upward trend, but recent fluctuations indicate some consolidation. The forecast suggests a continued upward movement, with prices likely to reach above the current resistance level. This suggests a bullish outlook for the medium term. Therefore, I recommend a long position on Jupiter. A suitable entry price would be around 85 cents, aligning with the current price and the potential for a breakout above the resistance. The stop loss should be set at 81 cents, below the recent support level, to protect against a sudden price reversal. The target price could be around 95 cents, aiming to capitalize on the projected price increase and reach a level close to the predicted resistance. This strategy allows for a balanced approach, aiming for moderate returns while managing risk effectively. Given the price trends and forecast for render, a short-term investment strategy focused on a long position appears promising. The historical prices show a generally upward trend, with the current price hovering near the support level of $6.802. The forecast predicts continued growth, reaching up to $8.25 in the coming weeks. This suggests that render has the potential for further price appreciation in the short term. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, around $7.16. The stop loss should be set at $6.802, aligning with the support level to minimize potential losses. The target price can be set at $8.08, the highest historical price recorded, allowing for a substantial profit margin if the forecast proves accurate. This strategy capitalizes on the expected upward momentum of render in the short term while managing risk through a well-defined stop loss. Based on the provided information for Solana name service, a short-term investment strategy appears to be most suitable. The historical price data shows a fluctuating trend with no clear long-term upward or downward momentum. The forecast price suggests a slight increase over the next week, but the price range remains relatively narrow. This indicates potential for short-term profit-taking opportunities. Therefore, an aggressive short-term strategy would involve taking a long position. The entry price could be around $0.255, close to the recent lows, and slightly below the current price. A stop loss should be placed at $0.2441, the support price, to minimize potential losses. The target price could be set at $0.275, the resistance price, aiming to capture the potential upward movement within the forecast range. This strategy capitalizes on the short-term price fluctuations while mitigating risk through a well-defined stop loss. Based on the provided data for Doge-Coin, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with recent upward movement, while the forecast suggests continued growth in the coming weeks. The support price of $0.39416 acts as a strong base, indicating potential for further upside. Therefore, an investment strategy involving a long position in Doge-Coin is recommended. The entry price should be around $0.325, aligning with the current price and the recent upward trend. A stop loss of $0.313 would protect against unexpected price drops, while a target price of $0.394 would capitalize on the potential for growth towards the resistance level and support price. This strategy allows for a balanced approach, capitalizing on the positive forecast while managing risk effectively. Based on the provided PEPE price data and forecast, a short-term investment strategy appears most suitable. The historical price shows volatility but a general upward trend. The current price sits near the support level of $0.0000204, suggesting a potential bounce. However, the forecast indicates a slight upward movement before stabilizing, which aligns with a short-term bullish outlook. Therefore, an aggressive short-term investment strategy would involve taking a long position. An ideal entry price would be around $0.0000205, aligning with the current price and the support level. The stop loss should be set at $0.0000204 to minimize potential losses if the price drops below the support. A target price of $0.0000216, the resistance level, would allow for capturing potential profits from the anticipated upward movement. This strategy capitalizes on the short-term bullish momentum while managing risk through a defined stop loss. Given the provided historical price data and forecast for SHIB, a short-term investment strategy appears to be the most suitable approach. The recent price action shows a fluctuating trend with a slight upward bias. While the forecast predicts a continued upward movement, it is essential to acknowledge the volatility inherent in the cryptocurrency market. Therefore, a long position is recommended to capitalize on this potential upward momentum. An ideal entry point would be around $0.0000221, aligning with the current price and the recent support level. To manage risk, a stop-loss order should be placed at $0.0000213, slightly below the recent lows, to protect against sudden price reversals. The target price for this trade could be set at $0.0000243, aiming to capture a significant portion of the projected upward movement. This strategy allows for potential profits while mitigating downside risk within a relatively short time frame. Based on the provided price information for Dog with Hat, a cautious investment strategy focusing on the medium term appears most suitable. The historical price data reveals a volatile trend with both upward and downward movements. While the forecast suggests a slight downward correction in the coming week, the historical data indicates potential for recovery. The support price of $1.818 acts as a crucial level to watch. A long position could be considered if the price rebounds from this level, aiming for the resistance price of $3.009. Therefore, a potential entry point could be around $1.85, a level slightly above the recent lows and close to the support price. The stop loss should be set at $1.818 to minimize potential losses if the price drops below the support. The target price could be set at $2.15, a level that represents a healthy gain while staying below the resistance. This strategy allows for potential profit from a price rebound while mitigating risk by setting a clear stop loss. Remember, this is just a suggested strategy and should be carefully evaluated based on your individual risk tolerance and market understanding. Based on the provided historical price data and forecast for Doge-Coin, a short-term investment strategy appears most suitable. The historical prices indicate a recent consolidation phase, hovering around the $0.0064 mark. The forecast suggests a slight downward trend in the coming week, with prices potentially dipping below the current support level. Considering this, a short position on Doge-Coin could be considered. To execute this strategy, an entry price of $0.0065, slightly above the current price and within the recent consolidation range, would be appropriate. A stop-loss order should be placed at $0.00665, protecting against potential upward price movements. The target price could be set at $0.0063, aligning with the forecasted lower price range. This strategy aims to capitalize on the potential short-term decline in Doge-Coin's price while managing risk through a well-defined stop-loss order. Based on the provided information for Near Protocol, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with recent consolidation around the $5 to $5.50 range. The forecast suggests a slight upward movement, with prices potentially reaching $5.80 in the coming weeks. The support price at $4.944 provides a safety net, while the resistance at $5.834 indicates the potential ceiling for this upward movement. Therefore, a long position in Near Protocol is recommended for a medium-term investment horizon. An entry price around $5.15, slightly above the current price and below the resistance level, offers a good entry point. The stop loss should be set at $4.95 to minimize potential losses if the price drops below the support level. The target price can be set at $5.75, allowing for a significant profit margin while staying below the resistance level. This strategy capitalizes on the potential for a moderate price increase in the coming weeks, while also managing risk effectively. Based on the provided price history and forecast for Internet Computer, a medium-term investment strategy appears most suitable. The historical price data demonstrates a consistent upward trend, albeit with some fluctuations. The forecast further supports this positive outlook, predicting continued price growth over the next week. Considering the support price of $12.106 and a resistance price of $15.19, a strategic entry point could be around $12.50, allowing for potential upside while mitigating risk below the support level. A stop-loss order at $12 would protect against unexpected downward movements, while a target price of $14.50 aims to capitalize on the predicted price increase. This approach allows for a balanced risk-reward profile, aiming to benefit from the anticipated medium-term growth of Internet Computer while managing potential downside risks. Given the price history and forecast for Injective, a cautious medium-term investment strategy is recommended. The historical price data shows a period of consolidation and slight downward pressure. While the forecast suggests a potential upward movement, the range remains relatively narrow. Therefore, a long position is suggested with an entry price around $20.80. This entry point allows for potential upside while staying below the recent high. The stop loss should be set at $19.80 to protect against a significant price decline, and the target price could be set at $23.50, aiming for a moderate gain within a timeframe of several weeks. This strategy balances risk and reward, taking advantage of the potential for a price increase while mitigating the downside potential. Given the historical price data and the forecast for BTC, a medium-term investment strategy appears promising. The price history demonstrates a general upward trend, with recent fluctuations around the support price of $520.30. The forecast suggests a continued upward movement, reaching potentially as high as $589 in the coming weeks. This upward momentum, coupled with the proximity to the support level, presents a favorable opportunity for a long position. To implement this strategy, an entry price around $525 would be appropriate, allowing you to buy in at a price slightly above the support level and benefit from potential price appreciation. A stop-loss order at $515 would help mitigate risk in case the price unexpectedly drops below the support. The target price could be set at $575, aiming to capture a significant portion of the projected price increase while leaving room for further upside potential. This strategy balances risk and reward, capitalizing on the bullish outlook for BTC over the medium term. Based on the provided price information for THETA network, a short-term investment strategy appears to be the most suitable. The historical prices indicate a fluctuating trend with recent upward momentum. The forecast suggests continued growth, with prices potentially reaching $2.60 within the next week. However, the resistance level at $3.15 suggests that significant upward movement might be limited. Therefore, a long position is recommended. An entry price of $2.42, slightly below the current price and above the support level of $2.386, would allow for potential profit-taking as the price moves towards the forecast. The stop loss should be set at $2.38 to minimize potential losses if the price retraces. The target price should be set at $2.55, aiming to capture a portion of the anticipated upward movement while remaining below the resistance level. This strategy allows for a balanced approach, capitalizing on the bullish forecast while managing risk effectively. Based on the provided data for WorldCoin, a short-term investment strategy appears most suitable. The historical price data reveals a slight upward trend, but the recent price movement suggests a potential consolidation or slight pullback. The forecast price also indicates a slight decline over the next week. This suggests a cautious approach, aiming to capitalize on any short-term dips. A long position could be considered if the price rebounds and surpasses the recent high of $2.42. In this scenario, a potential entry point could be around $2.35, with a stop loss set slightly below the recent low of $2.177, and a target price aiming for the resistance level of $2.42. However, given the current price trend and forecast, a short position might be more prudent, with an entry price around $2.30, a stop loss at $2.35, and a target price aiming for the support level of $2.177. This strategy aims to capitalize on a potential short-term decline while mitigating risk with a well-defined stop loss. Given the price trends and forecast for Hooked Protocol, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a general upward trend, with recent fluctuations around the 44 cents level. The forecast suggests continued growth, with prices potentially reaching $0.448 in the coming week. This indicates a bullish outlook for Hooked Protocol in the medium term. Therefore, a long position is recommended for this strategy. An entry price of $0.435 aligns with the current price and the support level of $0.4429. The stop loss should be set at $0.425 to protect against a potential pullback. The target price should be set at $0.455, aiming to capture a significant portion of the projected price increase and aligning with the resistance level of $0.5071. This strategy balances risk and reward, allowing investors to participate in the potential upside of Hooked Protocol while mitigating potential losses. Based on the provided Artificial Superintelligence Alliance price information, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent upward movement. The forecast predicts continued upward momentum, reaching $1.52 within the next week. However, the resistance level at $1.608 suggests that further substantial gains might be limited in the short term. Therefore, a long position is recommended to capitalize on the predicted price increase. An entry price of $1.39, aligning with the support price and current forecast, is suggested. To manage risk, a stop loss at $1.35, slightly below the recent lows, should be implemented. The target price should be set at $1.50, capturing potential gains before reaching the resistance level. This strategy aims to profit from the anticipated short-term price appreciation while mitigating potential downside risks. Given the price trends and forecast for Polkadot, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a recent period of consolidation, with the price fluctuating around the $7 mark. The forecast suggests a gradual upward movement, with prices potentially reaching $7.84 in the coming weeks. This indicates a bullish outlook in the medium term, making a long position advisable. An entry price of $7.10 would allow you to buy in at a slightly discounted price, aligning with the current price action and the forecast. The stop loss should be set at $6.80 to protect against any unexpected price drops, while the target price should be set at $7.70, aiming to capitalize on the potential upside movement towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Based on the provided Filecoin price information, a short-term investment strategy appears to be most suitable. The historical price data reveals a fluctuating trend, with recent price movements suggesting a potential consolidation phase. The forecast price indicates a gradual upward movement, but the relatively close proximity of the support price, $5.451, and the current price suggests a possible pullback before a significant upward surge. Therefore, a long position is recommended with an entry price around $5.35, slightly below the current price, to capitalize on potential price appreciation towards the forecast price range. A stop loss should be set at $5.25 to minimize potential losses if the price drops unexpectedly. The target price should be set at $5.60, allowing for a reasonable profit margin before reaching the resistance level. This strategy aims to take advantage of the anticipated upward momentum while managing risk through a well-defined stop loss and target price. Given the price trends and forecast for Conflux, a medium-term investment strategy appears most suitable. While the 2-week price change shows some volatility, the forecast suggests a gradual upward movement over the next week. The historical prices indicate a recent consolidation phase around $0.160, suggesting a potential breakout towards the resistance level of $0.1919. Therefore, a long position is recommended to capitalize on this potential upside. An entry price of $0.167, slightly above the current price and near the recent support level, allows for a favorable risk-reward ratio. The stop loss should be set at $0.164 to protect against any unexpected price reversals. The target price can be set at $0.185, aiming to capture a significant portion of the projected upward movement while leaving room for further potential gains. This medium-term approach allows for a balance between capturing potential gains and managing risk. Given the price trends and forecast for Ethereum name service, a medium-term investment strategy appears most suitable. The historical prices show a general upward trend, with recent fluctuations around the $34 price level. The forecast suggests a continuation of this upward movement, with prices expected to reach around $38 within the next week. This indicates a bullish outlook for Ethereum name service in the short to medium term. Therefore, a long position is recommended. An ideal entry price would be around $34.50, allowing you to buy in at a relatively low point within the current range. The stop loss should be set at $33.05, the support price, to minimize potential losses. The target price could be set at $37.50, which represents a significant upward move while still leaving room for further price appreciation. This strategy allows you to capitalize on the expected price increase while managing risk effectively. Based on the provided price information for Avalanche, a bullish investment strategy is recommended. The 2-week price change demonstrates an overall upward trend, with the forecast indicating further price appreciation. The historical prices show a consistent upward trajectory, suggesting a strong underlying demand for Avalanche. The current price is relatively close to the support level of $35.81, indicating a potential buying opportunity. Therefore, a long position is advisable to capitalize on the anticipated price increase. The entry price should be set at $36, aligning with the current price and the recent price action. The stop loss can be placed at $35.81, the support level, to protect against any unexpected price decline. The target price should be set at $42, considering the forecast price and the resistance level of $47.85. This strategy allows for potential profit while managing risk effectively. Given the Bitcoin price trends and forecast, a medium-term investment strategy appears suitable. The historical prices show a recent upward trend, but the forecast suggests a potential consolidation phase before further growth. The support price of $0.04527 provides a strong base for potential buying opportunities, while the resistance price of $0.05304 indicates the upper limit of the current consolidation range. Therefore, a long position is recommended with an entry price around $0.047, allowing for a small margin of safety below the current price. The stop loss should be placed at $0.0453, just below the support price, to minimize potential losses. The target price can be set at $0.0525, aiming to capture a significant portion of the potential upside within the medium-term timeframe. This strategy capitalizes on the positive underlying trend while managing risk effectively during the anticipated consolidation phase. Based on the provided price information for PENDLE, a medium-term investment strategy appears most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations around the $5.20 to $5.40 range. The forecast suggests continued upward movement, reaching approximately $5.60 in the coming weeks. This indicates a bullish sentiment for PENDLE in the medium term. Therefore, a long position is recommended. An optimal entry price would be around $5.25, allowing you to capitalize on the potential price increase towards the forecast. A stop-loss order should be placed at $4.90 to protect against significant price drops, while a target price of $5.60 would allow you to secure profits as the price approaches the forecasted high. This strategy balances risk and reward, aiming to capitalize on the expected upward momentum of PENDLE over the coming weeks. Given the sandbox price trends and forecast, a medium-term investment strategy appears most suitable. The historical price data reveals a period of consolidation after a significant price increase, with recent fluctuations hovering around the support price of $0.5423. The forecast suggests a gradual upward trend, with prices expected to reach $0.683 within the next week. This indicates a potential for capital appreciation in the medium term. Therefore, a long position is recommended. An ideal entry price would be around $0.565, slightly above the current price and below the resistance level of $0.6812. A stop loss at $0.5423, the support price, would protect against significant downside risk. The target price should be set at $0.670, allowing for potential profit before reaching the resistance level and providing room for market fluctuations. This strategy capitalizes on the expected upward momentum while managing risk effectively. Based on the provided information for Decentraland, a medium-term investment strategy appears most suitable. The historical price data shows fluctuations, but the overall trend indicates a potential for upward movement. The forecast price also suggests continued growth over the next week. While the current price is close to the support level, the resistance price is still relatively distant. This suggests that Decentraland might experience a period of consolidation before a potential breakout towards the resistance level. Therefore, a long position is recommended for a medium-term investment strategy. An ideal entry price would be around $0.505, slightly above the current price and below the resistance level. The stop loss should be set at 48 cents, below the recent support level, to minimize potential losses. The target price could be set at 57 cents, aiming to capture a significant portion of the potential upside movement before reaching the resistance level. This strategy allows for a balanced approach, capitalizing on the potential for growth while managing risk effectively. Based on the provided price data for ENG coin, a medium-term investment strategy appears to be the most suitable approach. The historical price shows some volatility but generally trends upwards. The forecast suggests continued upward momentum, with prices potentially reaching $0.258 in the coming week. However, the resistance level at $0.2477 indicates that the price may face some resistance before continuing its upward trajectory. Therefore, a long position is recommended for this strategy. An optimal entry price would be around $0.227, slightly below the current price, allowing for a margin of safety. The stop loss should be set at $0.2107, the support level, to limit potential downside risk. The target price could be set at $0.2477, aiming to capture a portion of the potential price increase before reaching the resistance level. This strategy allows for a balanced approach, capitalizing on the potential for growth while managing risk effectively. Given the price trends and forecast for Uniswap, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a slight upward trend, with the price hovering around the support level of $13.309. While the forecast indicates a gradual increase towards $15, the current price is already close to the resistance level of $16.219. Therefore, a short position is recommended to capitalize on the potential price correction. An entry price of $14.50 could be considered, allowing for a small buffer above the current price. The stop loss should be set at $14.80 to minimize potential losses if the price unexpectedly surges. The target price can be set at $13.50, aiming to capture a portion of the anticipated price decline. This strategy aims to profit from the potential price correction before Uniswap reaches its resistance level and potentially experiences a pullback. Based on the provided information for Chainlink, a short-term investment strategy appears most suitable. The historical price data shows a slight downward trend over the past 2 weeks, with the price currently hovering around the support level. The forecast predicts a continuation of this downward trend, suggesting a potential for further price decline in the coming week. This bearish outlook, coupled with the proximity to the support level, makes a short position a more attractive option. An aggressive short-term investment strategy could involve entering a short position at the current market price, around $22. A stop-loss order should be placed at $23 to limit potential losses if the price unexpectedly rebounds. The target price for this strategy could be set at $20, anticipating a decline towards the support level. This strategy aims to capitalize on the anticipated downward momentum in the short term, taking advantage of the potential price drop before any potential reversal. Based on the provided data for Aave, a medium-term investment strategy appears most suitable. The historical price data shows a volatile trend with both upward and downward movements. However, the forecast price indicates a generally upward trajectory over the next week. This suggests a potential for price appreciation in the medium term. Considering the support price of $309.84 and the resistance price of $376.86, an entry price around $330 would allow you to capitalize on the potential upward movement while mitigating risk. A stop-loss order placed at $309.84 would protect your investment if the price falls below the support level. The target price could be set at $370, aiming to capture a significant portion of the potential price increase. This strategy balances the risk and reward profile, aiming for moderate gains over a medium-term horizon. Based on the provided price history and forecast for EOS, a short-term investment strategy appears promising. The historical price data reveals a fluctuating trend, but the recent price movements suggest a potential upward momentum. The forecast further reinforces this notion, projecting an increase in price over the next week. Considering the support price of $0.7713 and the resistance price of $0.9289, a long position seems strategically sound. Therefore, an aggressive short-term investment strategy would involve entering a long position at a price close to the current market value, around $0.817. A stop-loss order should be placed at $0.7713, the support level, to minimize potential losses in case the price reverses direction. The target price could be set at $0.9289, the resistance level, aiming to capitalize on the anticipated upward movement. This strategy leverages the positive price forecast and the support/resistance levels to maximize potential returns within a short time frame. Based on the provided Tron price information, a medium-term investment strategy appears most suitable. The historical price data demonstrates a general upward trend, with recent price movements consolidating around the 26 cents level. The forecast suggests continued upward momentum, with prices potentially reaching $0.277 in the coming week. This indicates a bullish outlook for Tron in the short to medium term. Therefore, a long position is recommended. An entry price around $0.262 would allow you to capitalize on the potential price increase towards the forecast high of $0.277. A stop loss at $0.259 would protect your investment from any unexpected downward price movements. The target price should be set at $0.274, aiming for a modest profit while allowing for some room for further price appreciation. This strategy balances risk and reward, taking advantage of the bullish momentum while safeguarding against potential downside. Based on the provided information for Suncoin, a bullish strategy appears most promising. The historical price data demonstrates a general upward trend, with the price hovering near its recent highs. The forecast also suggests continued growth, with prices projected to climb steadily over the next week. This positive outlook, coupled with the support price situated below the current market value, indicates a strong foundation for potential gains. Therefore, I recommend a long position on Suncoin for a short to medium-term investment horizon. An optimal entry price would be around $0.0255, allowing you to capitalize on the anticipated price increase. Setting a stop loss at $0.0245 would help protect your investment from unexpected downward movements. A target price of $0.0270 offers a reasonable profit potential, aligning with the upward trajectory suggested by the forecast.